You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTER Schwartz from CBOE. The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for what is usually your bi-weekly options extravaganza. Only getting one dose this week. Don't blame us. Blame the funky holiday week that we had this week, of course, with July 4th falling on a Tuesday. So we had that weird kind of vestigial session on Monday. But I'm not a monster. I'm not going to make people come in and record for a half-day session when the markets are already closed by the time the show starts. So everyone out there, hope you had a good, safe, hope you have all your fingers and toes left after a fun, explosive holiday week. I saw quite a few fireworks over the last few days. Hope you had a chance to get out there and celebrate America, as they like to say out there. Judging from your responses in some of our polls this week, you guys have some interesting thoughts about all things and all ways to celebrate America. So we'll get into all that fun in a little bit. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-exciting, at least we tend to think so, Options Insider Radio Network. If I sound a little bit different, because I am coming to you from the Southern studio here. I'll be here for another Vol Views and Options Oddities tomorrow at the very least. So you never know down here in the Southern studio. Storm can roll in about 3 seconds. No warning at all, but we're looking pretty good. Sky is clear. I think we'll be good, not just for the old OB, but also for TWIFO coming up a little bit later. Of course, if you want more content in your lives, you know where to go, theoptionsinsider.com/pro, or for your cool cats out there, /secret club. Congrats to Mackenzie, one of our longtime listeners. She won the June Pro Trading Crate on the Options Bootcamp show yesterday, so congratulations to her. We'll have to throw some fun crypto-themed stuff in there because we know she's a bit of a crypto head. If you want to win the July crate, get on over there. TheOptionsInsider.com/pro is the place to go as we go to see who's joining us on the old program today. First, let's go out to a quiet, a sleepy, a tranquil hamlet outside of Chicago. Hopefully things are getting better out there. Sounds like I left Chicago just in time, Mr. Uncle Mike TOSAW from St. Charles Wealth Management, because the first week I'm gone, you guys have apocalyptic hellscape of smoke and fog and fire. And then the second week you have biblical floods. So it sounds like the plagues of Egypt have descended upon Chicago since I left, Mr. Uncle Mike. How are you holding up there in the land of St. Charles?
I mean, I'm just waiting for the locusts, the frogs, and then hopefully not Passover.
Yeah, bad stuff in the offing.
No, we're doing okay. So it's a beautiful day today, and for the most part, the weather's been pretty good up here. I mean, there's been a couple days to where it hasn't, but the 2 days where we had the heavy rains, I was in northern Wisconsin, so it worked out well.
They try to have the first ever NASCAR street race. It just happens to be in Chicago on the days we're having just ridiculous biblical floods. Like the whole city is flooding. Yeah, good times out there. We go a little bit farther afield. They probably have floods all the time on the shores of Maine because they are on the shores of Maine. The water, you can't really stop it at the end of the day, but he's up there at the top of his tower, so he should be safe. He is the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, how go things on the shores of Maine, sir?
Good. We finally have some sun. Summer's here. This is the first time I haven't been in the water yet. It's already July, whatever, because we had such a rainy June. So it is odd to sit here and look at the water every day and not jump into it. Yet that is my life somehow.
The travails.
I will today.
The travails of the rock lobster. Did you let off any fun fireworks over the 4th, sir?
No. I had to do some errands to help my wife, and I ended up, just driving the day, the 3rd, and on the 4th. I worked on the paddleboard. It was a very boring 4th of July because it was just rainy and weird. So
it doesn't sound fun at all. Errands and working on a paddleboat. Yeah, you know how to celebrate America, sir.
You know what it was? It was just doing dad stuff.
I ate copious amounts of food and watched explosions in the sky. That's how you celebrate America, sir.
That is proper. I'll agree. That's proper.
And let's go out now to the now hopefully sunny and relatively tranquil, at least compared to Chicago, shores of New York City, where we are joined once again by Mr. Henry Schwartz, a.k.a. the FLOWMASTER from CBOE. Mr. FLOWMASTER, welcome back to the show. How did you celebrate #America, sir?
America. I was upstate. It was very rainy. It rained for 3 days straight, I think. I did not see any fireworks, but I found a loose M-80 in my basement, so I blew that up.
That's the most American thing you could do, too. Find an old, loose firework. You have no idea if it's going to blow up in your hand or not, but let's just do it. That's also #America. I like it.
No, I was going to say, I mean, we're risk takers, right? So, I see some risk, I can take it.
You got a 40 delta maybe of losing a finger, you'll roll with those odds. Let's go. Let's blow up the loose M-80 from the basement as we keep on rolling. Right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, listeners, not only do when I go away does all of Chicago apparently become beset by biblical plagues, but also the markets kind of fall out of bed. But they could use a little bit of falling out of bed, I think, after the massive rallies that we've had pretty much over the last couple of weeks, with the exception of the last few sessions. Today, coming in to start the show, we're giving some of that back. Again, still north of 4,400, so take that give back with a huge grain of salt. Off almost a full percent, at 0.9%. It seems like maybe the sell-off mitigating a little bit. We are bouncing off the lows. We did break 4,400 right before showtime. Looks like we got to about 4,385 or so on the S&P, and now back up a little bit north of 4,400. So maybe the worst is over for today, or maybe this is just the calm before the proverbial storm there. We shall find out. Either way, about 0.9% to the red for the S&P to kick off our show. NASDAQ off pretty much exactly a full percent. and the Dow. A rare day where the Dow is the leader and to the dark side, off about 1.2%. So a lot of red on ye old screen today. What is interesting out there, listeners, is that we were at about a 16 handle right before showtime. Actually, a 16 and a half. Not that long before showtime. It puts us up exactly 3 points from where we were. Remember, not on Monday. No show on Monday. All the way back on the show last week. As I re-rack it right now, we're down a little bit. We're down to about a 15.90. Still pretty frothy, listeners, but we're giving back about 0.6 of a point. So we're up about 2.4 points now from where we were on last Thursday's show. But still, a 16 handle, that's a far cry from the 12 threatening the 11 handle we were at not too long ago out there. So, there's one nice thing about VIX being back in the teens is when it wants to, it can move as opposed to being glued at a 26 for the better part of a year like it was last year. VVIX still looking frothy again, triple digits again, 101, up 16 points from where it was this time last week. VXX, when we kicked off the show, is at about a 28, so a rare moment where VXX getting back some of its juice, up about 3 points from where it was this time last week. UVXY, same deal, also getting some of that juice back, 2180, right when we kicked off the show, up about exactly 3 points there as well. So UVXY getting some of its reverse split back. I'm sure the issuers will be happy to see that. They don't have to reverse split it again right now. SVIX, 2465, it can go down 3 points. So wherever he is right now, the once in future and now present Dr. VIX shedding a little bit of a tear, his beloved SVIX finally going down. UVIX 5.5 up a full point, and VolQ 1940 up about 1.1 points from where we were this time last year. Let's go around the horn the opposite of the way we came. Let's start in the land of the FLOWMASTER. Sir, what's catching your eye out there in another interesting topsy-turvy week in the market, sir?
It's definitely, we got a little bit of a sell-off, which I think is a little bit healthy. It felt to me like we were getting very frothy. I actually was looking at a couple of stocks yesterday where the skew was inverted, and you could collar things for a credit. Robinhood was one of them, and when I start to see that, it's awfully speculative, so makes me a little bit nervous. So I think this is kind of a good little shake-up. It's not much of a sell-off. I mean, I guess we got used to the market just going up, day after day. And you're right, we've bounced off of the lows. So it's kind of an average day. Volume's pretty good. Around, we'll hit around 45.5 million contracts today.
Speaking of volume, sir, you and your compatriots over there on the CBOE, it is that time of year. It's time to look back at the first half of the year, and you folks over there at CBOE did just that with your mid-year options review. Some interesting nuggets, 2.6 billion options contracts changing hands market-wide. If that sounds low, it's because it's just the second quarter, listeners. That's just looking at Q2 there. Across all products, ADV actually down in Q2 compared to Q1. Of course, net, it's still up on the year from where it was this time last year, but it down 7% from the record level set in Q1, and they're looking ahead a little bit, prognosticating a little bit, looking through the end of the year based on the volume levels we're seeing now. They expect this to be the fourth record year in a row, over 11.2 billion contracts is what the CBOE is expecting, almost a billion, 900 million more than this time last year. Mr. FLOWMASTER, what are your thoughts on this, and anything leap to mind for you as you're looking at this mid-year analysis from CBOE, sir?
No, I mean, I was kind of happy to crank that out as fast as I could. You're right, we're down quarter over quarter, but Q1 was nuts. Like the average daily volume was 49 million contracts, I think, in Q1. So we're still tracking, very strong. And I recommend people take a look at it. I cover some of the top 10 for single stocks, ETFs, and indexes, and there's the top leaders are don't change much. Although I also have a chart there. I was surprised they let me put it in because I used the logos from Tesla and Apple, but just showing how Tesla really has blown the doors off of Apple in terms of option volume now. Almost double the average daily volume of Apple, and that's the fourth quarter in a row that Tesla's been a leader. So I guess we don't talk about Apple anymore, and we just talk about Tesla now.
We don't talk about Bruno. We don't talk about Apple. Apparently, you are correct, sir. So this is a cool report. I agree. There are a lot of cool visuals. If folks want to see the visuals, where should they go, sir?
I find it by just Googling SIBO Insights. That's the name of the blog.
All right, check it out. SIBO Insights, listeners. And you're going to look for the mid-year options review. Again, we kind of just touched on it, but a lot of great data. Looking at this ADV chart here for the last decade or so, and just look at that, listeners. Just look at that and see how it just leaps off the page almost once 2020 rolls around and never looks back. Just looking at that, you could tell we are in an entirely new volume regime. So if you're one of the newer listeners to the network, one of the newer entrants to the options market, and you're wondering, why do these guys always go on about volume? What's the big deal? It's always been this way. No, look at this chart and you'll see why we make such a big deal out of it. This is a relatively recent phenomenon, listeners, and I don't think anyone, FLOWMASTER included, thought we'd get this far this quickly when it comes to overall options volume. Some other nuggets, obviously the top 10, most of the names you hear about all the time on the show. Number 10, sneaking into the top 10 single names, a Palantir for the year so far. That little uptick in AI over the end of Q2 really cementing Palantir out there. Interesting ETF options volume. I think you can guess the top 5 there. Number 10 there is TLT. Interesting. So some interesting nuggets. Again, great visuals. Check that out on the SIBO Insights blog. It is the SIBO Mid-Year Options Review. Let's keep on rolling. Let's go the way we went around the horn. Let's go out to the Rock Lobster. Mr. Rock Lobster, sir, what's catching your eye this week? And what is your own personal mid-year options review, sir?
Oh, my word. Well, yeah, we got VIX launched to, I think, 17 today. VXX was up $4 at one point today. So there's definitely some, there can be teeth left in, just so everybody remembers, like a VIX future is up 1-2 points, like on a percentage basis, that's actually quite a bit. So a product like VXX trading $25 yesterday, up $4 today. That's what, not quite 20%, but 18% a day. That's, 16, 17% in a day. That's a pretty good pop. So, just remember, the lower VIX futures go, if you have like those $2 gains, as a percentage, that's actually quite a bit. For these, the vol products and the inverse vol products obviously are working the other way. So, and that's something I noticed in our like easy button trade desk area. You could buy strangles in VXX yesterday for less than the theoretical decay of the product. So basically, you could buy a call and a put that theoretically VXX would decay out, and the put would cover the cost of the strangle. So yesterday, those strangles are trading like 88 cents, and today you could sell them for right around $2, and own the puts for free. Own the puts for actually 100% credit. So it was a good trade, and my roomies are very happy about that. So the vol products, like Mario's saying, contango, the put side is the strong side, and then those puts pay for your upside down the road. Not much has changed there. So we are. But I would say at least VXX has hung at this level for about a half hour now. So I think the market is saying, okay, kind of gearing up. I don't know if we'll see much more vol move today. It is kind of interesting, though, like SPX is kind of punching back. So that as an opportunity, and let's say, so volatility in VXX is up huge today. Like, the July 14th cycle, the volatility is up 37 points. So it was 47 yesterday. It's 84 today. So that's the magic explosive power of low vol in VXX, and basically all those products act the same. They're all a little different, but like those vols are going to kind of track together. So what would be looking good? There's all kinds of stuff. But again, SVIX is down a little today, but this is where I would set up to try to look, for a bounce or something like that. as far as the rest of the market, who knows? I'm glad employment is very strong. I thought for a long time we were just in the kind of the reopening trade, right? After 2020, all 2021, 2022 should just be like, hey, everybody's getting back to work. We killed, 50 million jobs, and everybody got back to work. Then we got derailed because of this inflation madness and all this other stuff. But I think that demand is still there. I mean, I don't know about you, but in Maine, like, you cannot drive down the street without seeing help wanted signs. So I don't know what happened to all the people that all of a sudden nobody wants to work anymore. But the employment report does not surprise me. And I think overall that should be a net positive. But the market doesn't want higher rates. And I believe rates have been ticking up pretty steadily. So, and I think that's, again, traders' concern. I think what Henry or Mike had just said, like, yeah, we have been going straight up and we need a little bit of a blow off here. So what I would say, though, is the term structure curve wise, the whole thing didn't really lift, just the front end popped. So that's more of like a short term action. And I haven't seen anything to indicate that the action continues because nobody's really coming for the vol to see if there's some continuation here. So it wouldn't surprise me if we erase this loss this week, to be quite honest. Unless I see something turn around on the curve, that's what I see.
Yeah, you don't normally come to the VXX party for the upside, but getting a little bit this week. And you're right, I buried the lead. VIX did kiss a 17 handle ever so briefly this morning, 17.08. So forget about 12 handle, 17 handle, Mr. Rock Lobster. You're right.
I know.
I'm kind of with you. It is kind of fun to be back in the teens again and see VIX kind of doing its thing again. We haven't seen that in a little bit. There are newer entrants to this market who thought VIX was just sat there all year and never did anything. So it's kind of fun. As much as I bemoan the 12, it terrifies me because I get flashbacks of 2017. But beyond that, seeing VIX actually moving and doing some stuff again, it warms the old cockles of the heart at the end of the day. It was always warm he's just bringing the warm fuzzies all the time. He is Uncle Mike TOSAW. Mr. Uncle Mike, sir, what is catching your eye out there in the markets? And do you have any personal mid-year options analysis you want to share with us, sir? Have at it.
Well, I mean, what's seeing it, we were the 44.5 mark was kind of acted as a point of resistance in the near term, in that we made a run for it. I would say, let's looking at my chart here, we made a run for it on the 16th. We had highs of 44.48. And I'm referring to the S&P 500, of course. And then right before the weekend, looked like it may have been some window dressing for some half-year or end of quarter window dressing for the buyers that came in last Friday. We actually closed at 44.50. I didn't have a ton of movement on the half trading day Monday, but I don't know if anyone was even expecting that much movement at all. And then yesterday we did not have a ton of movement either. And then today we actually have a little bit of a sell-off. So it's going to be interesting to see, and I posted on my Twitter account today if we can hold 4,400. Just curious of anyone's thoughts on that. But I think that's the key question for the day today is, are we able to hold that? We made our run at the 4,450 level. We've come down off that. Did it twice, I should say. And I think that in the near term, where resistance would be is along the lines of the 43, probably like the 43.5 level, I would say. Maybe a little bit lower than that. And that would be from June 26th. You could argue and make a case for levels around there for the near term. But ultimately, what this is going to come down to, we're still in a macro news market. And if the Fed says that they're going to raise rates, or there's speculation of the Fed raising rates, then I don't think that's going to bode well for the market. I think that the market is kind of going up like it has on hopium, if you will, that either the Fed is done raising rates or inflation is going to do better. And I hope that's the case. But I think it's something to where we need to step back and take a look at this and say, hey, we've had a pretty decent sized rally over the course of the last month or so. Now, the other point to note is that we're selling off in the bonds today as well. And oftentimes when we have the same move, when we do not have an inverse move in both stocks and bonds, meaning stocks are up, bonds are down, or vice versa, a lot of time money appears in a mysterious spot a couple days later. And where's this money going right now? People are selling their bonds. People are selling their stocks. Where are we going? And I think we're going to have a rally in one of those two, whether it's stocks or bonds, within the next week or so. The $1 million question or $500 question, depending on the size of your trading account, is which one is going to have the rally. So I think that's something that we need to keep an eye on as well, in addition to everything else with which we've mentioned. Now, a couple of single name stocks that I'm just keeping an eye on. Meta actually looked like they were going to make a run at 300 earlier today, but they did not. They got as high as a little over 298. In the banking sector, JP Morgan is pulling back a little bit today, down 1.5%. Microsoft, that just does not, that guy, Mr. Softy, does not want to go down. It's past the 340 mark. That's a stock that we have as a holding in our triple income, as well as JP Morgan, just for full disclosure on it. And then Apple remains high. It's down 24 cents on the day as I'm looking at this right now. But what's interesting about the tech area, it looks like Microsoft is what's holding it up in a lot of ways today and keeping it from not going down any further. Interesting market, to say the least, that we're in right now.
That it is, listeners. Let's get out and see what else is interesting out there today. Let's start in the major indices. And spoiler alert, obviously we're coming off a truncated holiday week. So for the most part, ADV is down across the board. Of course, after you hear some of today's numbers, you'll probably expect them to start moving in the other direction. Let's start with VIX. And, VIX likes a day, at least from an options volume perspective. The traders like a day where VIX is moving 2, 3, 4 handles at a clip, because we are seeing some numbers out there. VIX already north of 1 million contracts right now, 1.07 million. We're not even halfway through the show, listeners. That is some paper. That's also a far cry from the ADV, which, as I mentioned, took a bit of a holiday hit. It's down back below 800K now. 782,000 is the ADV, still respectable. But of course, after today, it's going to be moving in the other direction. SPY just saying, look out above. 5.7 million contracts already on the tape for SPY. The ADV about 7.9 million. So again, below 8 million again out there. The S, 1.85 million contracts. That's a heck of a lot of paper, listeners. The ADV, 2.8 million. Seems like it's on pace to blow past that. The small caps, IWM, 877,000 contracts on the tape. So they're closing in on their ADV, which is still right around 1 million, about 1.02 million to be precise. So they've been hanging out right around that level for quite some time. Seems like they're going to blow past it again today. And the Qs, 2.21 million right now. The ADV a little bit north of 3, about 3.13 million contracts out. Let's get out to the single name, see what kind of day we're having. And again, it's a respectable day, but it's not a rock'em sock'em robots day. It is summertime after all, listeners, so you'd be forgiven for expecting a little bit lighter volume out there. And number 10, it cost you 214,000 contracts to break into our top 10 today, listeners. That gets you out to SOFI, our old friend SOFI, looking at about an 8 handle right now, almost exactly, off about 32 cents right now. So they're coming for SOFI a little bit. Actually, they broke through the 8 handle, got down to 786 this morning. Looks like they're threatening to break through it again to the downside here. SOFI, of course, though, over the last month has had quite the run. Let's go a little bit farther. Let's go a little bit beyond a month, about 2 months. They were trading in a 4 handle back in mid-May, listeners. So they've had a nice couple of months, even if they are giving some of that back right now. Looks like they topped out at about, let's see, it looks like they hit 10 and a quarter pretty much back just a couple of weeks ago. So they obviously have come off the highs from there, but still pretty far from their lows of 4 and change, and putting up 214,000 contracts. Number 9, haven't seen this one on our docket in a while. Good old Bank of America, ticker symbol BAC, of course, trading 28.20 right now, off nearly $1, about 90 cents. Again, good for 229,000 contracts on the tape right now. Number 8, now we're going back to EVs. This sector, we've been talking for a little while here. I know the FLOWMASTER we have on this show and on Options Oddities talking about some interesting upside going on out there in a lot of these smaller EV makers. Well, seems like some of them are getting their payout, at least RIVN. RIVN making a deal here with Amazon that's popping some stock and some options volume. 302,000 contracts on the tape for RIVN today. RIVN hanging out almost $21, about $20.94, up 620 or 42%. That's, of course, in the past 5 days. It was trading 14 3/4 last time we did the show, listeners. Looking at it today, up about 40 cents or about 2%. Still a nice pop. Again, they're looking at this deal they've got going with Amazon. We saw something similar with Peloton that ended up kind of sputtering out a little bit. We'll see if this Rivian Amazon thing has more legs. Of course, they're also breaking news right now that they have a lawsuit over their IPO, that they defrauded investors. So I guess you win some, you lose some out there on the Rivian front, but looks like they are net up and putting up some numbers today. 302,000 for the number 8 spot. Number 7, Uncle Mike's favorite, it's SOFI, 340,000 contracts. Also trading at 342 3/4. So up about, $4.50 today. My goodness, good old SOFI. My goodness. They got an upgrade from Morgan Stanley today. That's what's carrying the stock. Looks like that's going to carry them above the 3 trillion level as well. At least that's the outlook for. That's what Morgan Stanley is saying. AI is going to carry them above 3 trillion. You know our thoughts on analysts here on the network, listeners, but intriguing stuff. 341 and about a half here. So quite the pop for good old SOFI. Coming in at number 6, AMD, 341,000 contracts up there. AMD taking a break today, off about $1.50, trading 112 and a half. Again, good for the number 6 spot today. Number 5 is the Amazonians, 449,000 contracts on the tape. What's up with Amazon? Also taking a break, 128 and about a half right now, off nearly $2 or about 1.5% on the day. So they've dipped back below their 52-week high, which was 146 and about a half, trading again 128 and about a third right now. So taking a little bit of a break out there for the Amazonians. Number 4. We've got NVIDIA, 478,000 contracts on the tape for NVIDIA. You know the saga of NVIDIA. Actually, apparently it can sell off because it's off about $5.60 today, about 1.3%. Trading 417.60 right now. Again, the saga that is NVIDIA really transforming the latter half of Q2 and the market, just carrying us all on this AI wave as a result. So NVIDIA, number 4, 478,000 contracts. Number 3, we got some fruit company you may have heard of. I think it's called Apple. That's how the French pronounce it. Selling off a little bit today, off about 40 cents. So I guess Apple can go down. And you know, the market isn't happy when Apple's selling off. It still is within about $4 of its all-time high. So not exactly going to play any sad violins or trombones for this one. It is selling off 40 cents today. Again, good for a pretty light 573,000. Number 2, it's another one Uncle Mike was just talking about. It's the artist formerly known as Facebook. It's Meta, selling off $2.50 today, $291.86. They flirted with 300, as Uncle Mike was saying. $298.12 is the high, so they have sold off impressively from there, over $6 from the high. Of course, you go back to when we did our poll on them not that long ago, listeners. They've tripled since then almost. So, yeah, a good run for them net, even if they are selling off a little bit today. The number 2 spot, 593. You know what number 1 is, listeners. Don't need me to tell you. It's Tesla. 1.43 million contracts on the tape for good old Tesla today. Trading 275.86 off 662 today, or 2.3%. So I guess the markets that lift Rivian are hitting Tesla today. But again, take in the top spot as we keep on rolling, listeners. It is time to get weird, time to get wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get weird, let's get wild, let's unleash the Eye of Sauron, see what it fixes its fiery gaze upon this week. Let's start with the Eye of the FLOWMASTER. Mr. FLOWMASTER, the last time we chatted a week ago, You were all hot and bothered about some Apple upside, and it seems like those worked out, at least in the near term. Apple rallied pretty much right through those strikes. Did you notice that last week, sir?
I did. I actually thought we were going to get up to 200 faster than anybody was expecting, just because it seemed like there was a pretty solid, a little bit of a frenzy going on. But we didn't. So it's going to be a little bit longer. But it wouldn't surprise me if we see another push at some time soon, just because it's such a popular name. And it just hits the headlines constantly.
Yeah, we talked about it a little bit on Options Oddities the following day, and those calls were mostly already in the money and looking pretty good. So I'll have to go look and see if they took them off. But intriguing stuff there. The near-term upside, obviously taking a break today, listeners, but looked pretty good almost right away the day after we talked about them. Let's get out to what's catching the FLOWMASTER's eye today. First, let's go out to, this looks like a newcomer to us, VF Corp, ticker symbol VFC. This is an American global apparel and footwear company founded in 1899, listeners, out of Denver. So intriguing stuff out there. Trading 18 and a quarter today, off about 75 cents or nearly 4%. So not liking itself a little bit of upside today. They're coming for its day. A year ago was trading a wee bit higher to the tune of about 44 and 3/4. So substantially higher. And they got up right around that time to their high for the year of 48.63. And then pretty much they have never really looked back. They started selling off right away. By September, they got down to about $30. And they were hanging out there for a while. And then in February, they took the next leg down, started selling off. They hit 20 in March. And they started selling off. They got their low for the year about 16 and 3/4. That was right at the beginning of June, the end of May, right around that time frame. So since then, they're up about $1.50 or so. So I guess you can look at it glass half full that way. But net on the year, pretty rough, off nearly 60% on the year. Mr. FLOWMASTER, what did your eye spot out there in everyone's favorite American global apparel and footwear company?
Sure. So I saw this one hit the tape just after 11, and I did dig into it. They own North Face. That was the one brand and I think Vans shoes too. But the first thing that I saw was a couple of 3,000 lots in the Feb 30 calls. They were tied to stock. It looks like they were probably a seller, but there was a mid-market print. Basically, Feb 30 calls traded for 25 cents versus 1804 hedge. And as I was looking at that one, I saw a more directional trade hit, which was a sweep buyer of the July 18 calls. They paid 65 cents for 2,700 of these. In a big sweep. I think it had 75 pieces to it. So it was kind of one of the more aggressive sweeps that I've seen go by. And it's and it's an opening trade too. So that one, I actually think they might have kind of bottom ticked the stock too, because the stock was around 1785-ish when that printed. And stock's right back up at 1828. Now the broad market has bounced too, but they definitely took a big bite down there. So that was an interesting long idea that I saw go by.
Yeah, I like that one. I happened to notice it looking here. You're right. They did get a good scoop in there. They got the stock at, looks like around 1784. So yeah, they got the stock about $0.50 lower. So the Rock Lobster's already salivating over those bad boys. The other ones, the Feb 30s, yeah, that's a interesting one. That might be a bit of a bridge too far for me. You need the stock to double by February. See those bad boys really look good. They did them tied too, so that's never my favorite when you're doing crazy out of the money calls, no delta. Why are you even doing those tied? I don't know. Not my favorite there. But Mr. Rock Lobster, what are your thoughts on? Looks like somebody maybe doing a little bit of bottom scooping here in VFC, and then also doing some tied far out of the money calls, sir.
Yeah, I know. This is like the classic, value stock. I think they had some, I had recently, maybe some woke issues or something, and stock sells off from mid 40s down to the 20s. Nobody's going to go out, buy tents and skateboard anymore, which I don't know. I don't think that's going to happen. I think people are still going to do that stuff. So I think there's a reasonable, very reasonable call purchase. Clearly, I think the cycle, right, Henry, is a July ordinary. So yeah, 30. So it's, the sniff test here. If you're up 50% on the calls on the day you buy them, that's looking pretty good. And they maintained a dividend, I believe. Let's see here. So they used to pay a $2 a year dividend. Right now they're doing about $1.20. So like 6-7% yield. I don't know. I think this is. It looks like a pretty again. If you think the economy recovers, people get a little bit more chill. You could do quite well owning this. So this is actually on my list of stocks trading at lows of the year. And Henry helped bring it to light once again. So yeah, I think vol's pretty low in here. It's only an $18 stock. Yeah, I like this one. Hard not to like it.
Rock Lobster likes it. I got a feeling you're going to like our next one, too, because this is something we've talked about a few times now. This is Bumble, a.k.a. The platform for ladies looking for a little bit of love out there. One of the hot IPOs a few years ago. They have, of course, fallen on hard times since, off about 51% on the year, trading 16 and a quarter right now. Ticker symbol BMBL, listeners. A year ago, it was trading $33. Got up to their high for the year of about almost 40, 39 and a third. That was in July of last year as well. Then the rest of the year was kind of look out below. They got down to 14 and three quarters at the end of May, beginning of June. So they've rallied about $1.50 as well. Again, glass half full outlook there when they're off over 50% on the year. But intriguing stuff. We have been talking about Bumble a lot, including most recently on Options Oddities. We talked about back on the May 5th show, someone writing a line in the sand on the June 15 puts, 10,000 plus times for the old 3/8. And those worked out pretty well. The stock closed at right around $18, $17.90 or so. So those 15 puts worked out. They kept their money. It sounds like you got something similar on your radar today in Bumble, Mr. Flowmaster. What'd you notice?
Yeah, this was an interesting one. So we saw a seller of 15,000 of the August 12.5 puts for 24 cents. And stock then was around 1577, and there is open interest there. So there's about 20,000 contracts open. So first I thought it was probably just a seller, taking advantage of a little bit of a sell-off in the stock. But then when I went back and looked at where the 20,000 that were open came from, it was from June 26th when they were sold for 20 cents to open. So I actually think this is probably one trader doubling up. A little bit like you said, kind of putting a line in the sand, and position of 30,000 short puts on this stock that only trades like 2.8 million shares a day is a big position, and it kind of feels like we used to call him the put bomber, when you'd have a very large hedge fund, along the likes of Warren Buffett or something, who just basically says, you know what, if the stock goes down there, I'll just take the whole company. And they sell massive chunks of puts every once in a while. So that's kind of what this feels like to me, is somebody who's very comfortable with owning the stock, a lot of the stock, if we happen to get down there in the next month or two. Otherwise, the premium melts away and they keep their money.
Yeah, I don't hate these. Getting nearly a quarter for the 12 half strike. I said we're just talking about the 15 strike, and the stock was trading for 18, so 12 and a half strike for a quarter. I don't know. I don't hate these. Mr. Rock Lobster, I'm guessing you kind of like these, and if this is the same person, and past his prologue, it probably is, they have a decent track record. Now they're getting to go all the way down to the 12 and a half strike in Bumble, sir. What say you?
Yeah, I thought haven't we recorded these a couple times, Mark? A couple of Bumble puts,
multiple sellers? Bumble line in the sand puts, yes.
Yeah, and I think they've done very well on this one. I like, again, hard not to like this. I don't think Bumble's going anywhere. You mean in a bad way, that is? Okay, it's going to be around. People are bumbling around, doing whatever they're doing. I don't know. But yeah, I think and then they're looking. You're saying. Okay, there's huge size. That might be, wow, interesting that they're going after the 12s with already 20,000 open. So Henry's going with this as selling more, huh? On this particular one.
Till we see, we'll see what the open interest is tomorrow morning. But
Okay. But it does feel like they're just like going yard and doing it some more, to be honest.
Hard to fault them. It's worked out so far, right?
Yeah, I think, the stock's pretty cheap. I mean, the reality is it's a pretty inexpensive company at this point, and the landscape is littered with these types. So, yeah, I'm looking 2 years. Yeah, it was a $60 stock when everybody was going, when everybody was in the frothy unicorn stage. So, yeah, if you're gonna be a put seller, the yield is, I think it's a decent yield. Like it's giving 1%. For a line in the sand to get that much yield is not too bad.
Yeah,
to be honest.
I don't hate these at all. I don't hate those at all.
I don't either.
We might have to do a little oddities
Pretty cool
follow-up.
one, but as Henry says, tomorrow we will know the story. Because if they're just closing their long puts, they have a tale of sadness and woe.
Yeah.
Even though I know the producer says it's just a tale of sorrow, it will always be sadness and woe.
Sadness and woe sounds better. I'm with you on that. Yeah, you're right. We've seen so many line in the sand puts. I have to imagine this is another one out here. But we shall know for certain tomorrow as we keep on going to another newcomer. This is an interesting one. I like the name, Chimera Investment Corporation. You don't see that too often. Some three-headed mythological monsters, goats, lions, all sorts of fun. This is just a boring old REIT trading $5.38. A ticker symbol CIM, off about 15 cents today. So they have been coming for REITs. You know the story, listeners. How many puts have we talked about people buying in REITs over the year? Let's see. A year ago, this name was trading $9 and change, and they got up to $10.66. An interesting year for England. Maybe not a great stock price for Chimera because they couldn't hold it. They were trading $5. They hit $10.66 in July. By October, they were down to $5, and they've been bouncing in this $5 range. They briefly kissed 7.5 in February, but mostly bouncing around in this 4.5 to 5 and change range ever since. Trading $5.38 right now, so a rough go here for Chimera Investment Corporation. Mr. FLOWMASTER, sir, what did you spot out here?
I had to go look this one up too because I didn't know what stock it was. This is trading 15 times its average daily volume, so it is a standout. What was weird to me was they swept, and it's got to be the same customer. They swept 4,000 of the D6 calls they paid a quarter, and they swept 4,000 of the Jan 6 calls, paid 30 cents. Both at almost the same exact moment. And so, you're talking about a couple $100,000 in premium. They both look opening to me. And, with the stock at $5.38, it's a decent upside bet. It's just the timing's interesting that they're using year-end calls or around the year-end. And you're right. Actually, I looked at like this, the overall sector today's got smacked. If you look at all the big REITs, some of them are down, 6, 7, 8%. So, this one's actually holding up really well. And again, I think it's kind of somebody trying to take advantage of a little dip. Now, I mean, it's interesting because this is really not much of a dip considering where we've come in the last month. But, REITs is an interesting sector, especially now. I think Chimera specializes in residential mortgages. But, there's so much kind of uncertainty about real estate and especially commercial real estate with the flexible work and everything else after COVID. So it's an interesting one. Seeing somebody sweep up 8,000 calls, 15 times normal volume, is also kind of a pretty strong bullish message. I haven't taken any of these today that I saw, but they're definitely noticeable. I'm kind of looking for more of a pullback than just a little 30 or 40 handles in the futures.
Yeah, all of a sudden we have started to notice a couple people nibbling at some calls in REITs. Interesting. Mr. Rock Lobster, is now the time, sir? Is the worm turning in all the REITs, sir? Time to gobble up the D6s in Chimera.
Well, let's see. I think last year the story was all of the REITs, Brookfield Asset Management, like put buyers. And as I recall, they had a little bit of success earlier, and then it all kind of didn't happen.
Yeah, it kind of petered out after a while. Yeah,
and so I think I'm looking at my list here. I'm looking at my Bs on my watch list. BKLN. Yeah, BKLN. So we're looking at that. We're looking at these different names, and now like it doesn't appear that anything really happened. You thought we were, because there was some upheaval in rates, and you thought there'd be a little bit more action that way, but it hasn't appeared that way, and now they're going the other way. So maybe the only thing I can think of is like, yeah, okay, they've gotten much better at hedging interest rate risk and all that other kind of stuff, which you would guess, like maybe they saw the inflation thing coming. But yeah, I've never actually, because these things generally pay such big dividends that calls never make any money. So Chimera, like they're going to pay like $1 in dividends, over $1 in dividends this year, like right around $1. So it's on a $6 stock. You'd like, how are those calls ever going to make any money? Because, and I like the price of them. Maybe it looks like they're doing buy, but again, it's hard like for these REITs to make money because the dividends are so high that stocks keep getting kind of reset, and but it could happen, right? Maybe somebody wants to rush for yield, push the stock price up, and all of a sudden these 35-cent calls are worth $1 because the stock is trading $7 again. Because it was an $8 stock at the end of 2022. That was an $8 stock. So I can see if people are looking at the end of the interest rate cycle that they want to pile back into this. So it's worth probably sticking on your watch list to keep an eye on this one, because it doesn't appear that it's going on my year low list. But that's kind of the story. So I think maybe it's another thing too, Mark. Like eventually, all these type of trades get unwound. Everybody got in on the puts, looking for the sell-off in 2023, which mostly they got. And now everybody's looking the other way. I mean, if you got $2-3 trillion market cap companies, NVIDIA is $1 trillion. No, there's only like a quarter of the world's gross domestic product in 3 companies, or something like that. So maybe this little mortgage REIT doesn't look so bad, paying 20% divvy a year.
I'll take that yield.
There you go. Get all your Chimera you can listen. But you know what you didn't get, because there was no show on Monday? You didn't get a strategy block. But you know what? We got you here on the show, because we're going to do one right now.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, never let it be said that we leave you hanging here on the show. No show on Monday. That means a double dose of Uncle Mike on Thursday with a little bit of the old strategery. Uncle Mike, I know you were restless. You were tossing and turning on Monday because you were going to miss the people, but you get your shot today, sir. What do you have in store for them on the old strat block?
Well, I want to talk about diversification kind of from a different point of view than you hear it traditionally in most financial circles. So traditional diversification is along the lines of having X% of your money in small caps, X% in large caps, X% in mid caps, X% in international. And not to say that those are bad things. I have exposure with clients there, but I think it's important to take it to another level. The bottom line is this: if the S&P 500 goes down 15%, then it's very likely that small caps, mid caps, large caps will go down as well over time. In the near term, and even recently, that has not been the case. But understand that over time, that they do kind of work in lock-sync in a lot of ways. And so with that, I think it's important to have diversification with the 4 major asset classes that exist: stocks, bonds, commodities, and real estate. Now, we had just talked about puts and real estate a little while ago, but with this, a lot of my clients, if they do own their own home, a lot of people, that is their real estate exposure. And I've also had clients through the years that have been real estate people in that they own properties, they own rentals and things like that. What I want to emphasize is having not only diversification within the size of your stock, but have diversification within asset classes as well. The other thing that I think it's important with which to have diversification, and this is where, in a lot of ways, I think that I am a little bit more unique than most financial advisors, is that have diversification within your strategies. So let's say that we do have a sideways market. Well, do you have any covered call exposure? Or let's say that, let's go back in time a year, and let's say that bonds aren't really paying much, and you really don't want to have a lot of exposure to bonds. Well, hedged equity could be something for you as well, meaning you, for oversimplification purposes, you're actually buying stocks and buying puts against them. That could be something else. And if you want to have some type of leverage in certain areas, options give you the ability to do that too. So for this July 6th edition of the strategy block, I want to emphasize, don't just have diversification within different sizes of stocks. Have diversification with strategy as well as other major asset classes.
All right, listen, it's going to do it for a little bit of the old strategery. As we now go into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like we said, a truncated holiday week this week, but a full week to look out upon next week. Before we get there really quickly, let's get an update on the most important question of the day, which we asked you back on Monday. We said, in the spirit of the season, what is your favorite food to eat on the 4th of July? Hot dogs, hamburgers, corn on the cob, or the American staple of apple pie? And right now, with 22 hours to go, listeners, so the clock is ticking, hamburgers taking the lead, 48.7%. My personal choice, hot dogs, coming in number 2, 35.9%. You ask me what I think about on 4th of July, I think about grilling out some hot dogs. I don't know why that is, but that's what jumps to mind for me. Apple pie, number 3, 10.3%. And bringing up the rear, good old corn on the cob, only 5.1%. This one's been contentious. People have written in weird things like bear. You don't really eat bear, but hey, who am I to judge what you eat at the end of the day, listeners? Intriguing stuff. We also had a hot debate on Options Boot Camp yesterday with Mr. P about whether ketchup is an appropriate condiment for a hot dog. We put it out to you folks, the audience. I was very pleased to say that nearly 2/3 of you agree with me. Ketchup, a delicious topping for a hot dog. At the end of the day, it's just a kind of cased meat. It's not a sausage. If it was a sausage, then I would agree with you. You can put mustard and everything else on it. But, ketchup on a hot dog, pretty delicious. And luckily, our audience, smart people that you are, agree with me. Let's go around the horn. Let's go out to the Flowmaster, sir. A, what is your favorite 4th of July food? B, are you a a ketchup on a hot dog guy? And then C, what do you keep an eye on for the next couple of weeks? Because you'll be traveling next week. We won't see you for a bit.
That's true. Hot dog would definitely be my go-to on the 4th of July. I do not like ketchup on a hot dog. I also don't like that really weird super green relish that you people in Chicago put on your hot dog. It kind of freaks me out. But I love some good sauerkraut. So that's what I'm all about. For the next couple of weeks, you're right, I'm going to be gone. I will not even be checking the screens for a couple of weeks, if you can believe that. It's going to be like detox. I'm going to try to get you some nice guest stars from CBOE's talent pool. But, I'm going to be looking, my expectations for the market is kind of sideways. Like I said, I wouldn't mind if we pulled back a few more percent. We're finally going to get into some new earnings. I think next week we start to see some airlines and some banks, right? Citibank and JP Morgan, Wells Fargo, they're all around the 14th of July. So I think that we're going to have plenty to talk about. Well, you're going to have plenty to talk about without me, and I will miss you, but I'll be back at the end of the month.
You'll be weeping every Thursday without us. We know, sir. We know. And Mr. Rock Lobster, same question for you. What is your preferred 4th of July food? Are you a ketchup on a hot dog guy? And what are you keeping an eye on until our next show on Monday?
I'm not a ketchup on a hot dog guy, but I like everything on a hot dog. I like chili cheese dogs. I like the sauerkraut, pickles, and tomatoes and mustard dog with that crazy spice, that Portillo's puts on their crazy cinnamon salt. Like that fixes. I mean that fixes the worst hot dog ever. You just pour some of that stuff on. And a burger, like it's very hard for me. I have to say, on balance though, as much if I can make the dog exactly how I want, I would probably go dog. Although I am a crazy hamburger maker as well, so to me, I know I have to make a choice. Sugar, honey, iced tea. I'm just going to go with the crazy dog. I'm going to go with the crazy dog, as much as I like a great burger on the 4th of July. I think, and I guess the peoples are already going hamburger, but I do like those crazy hot dogs.
And what are you watching until the next show? And where should folks go if they want to find all your good goodies?
All the good goodies? Well, again, VIX is only up $1 right now after a 3-handle rally. It is not going to surprise me if VIX finishes even on the day, to be quite honest at you at this point, because the sell-off is... I was looking at some August calls that I own. I'm like, okay, I'll save them. And they've had a 50%, like they've gone from 290 to 210. If I didn't reduce some SPY put spreads and stuff, I would have been a little grumpy. I sold all of my July today, so all my July upside today. So from that point of view, it's like, okay, I think we're going to watch the market actually become a stock market again. So clearly not going to be fueled by anything the Fed does. Ultimately, jobs are good. So long term, that's good. So I would expect us to kind of float around a little bit. The bid for vol or the bid for vol is dropping, so that's kind of what it's saying to me. Front end of the curve, I think 9-day VIX, which is a great indicator for the listeners. 9-day VIX is 1398. I'm just saying that is not the stuff of craziness. So I think we're just going to do a little sideways back and forth. I think we're going to see a 13 handle again. If this is it, because we're going to get that jobs number tomorrow again, which everybody's assuming is going to be hot at this point. So anyway, and if you like what we do, 888-TRADE-01, get 10% off if you saw this show, because I know we are running out of time.
And last but certainly not least, Mr. Uncle Mike, sir, what are you keeping an eye on for the next week? Are you a hot dog guy on 4th of July? Are you a ketchup on hot dog guy? And where can folks go to get all of your good goodies?
Well, in terms of the 4th of July, at my party that we had 2 days ago, I grilled up a bunch of burgers, I grilled up a bunch of brats, and then when it was time to put hot dogs on next, everyone was full. So I would say that I'm definitely a cheeseburger kind of guy. I don't I'm not a hamburger guy. I'm a cheeseburger guy. It's not a burger without cheese, in my opinion. If I am going to have a hot dog, yeah, I'd put ketchup on it. And then what was the other question?
What are you keeping an eye on until our next show on Monday, sir? And where can folks go to find all the goodness of Uncle Mike?
Oh, yeah, the actual parts of the show that we talk about. Yeah, still watching the 4,400 mark, or watching that pretty closely today. I think it's going to be a key number because it's the big number right now to see if we hold it. If people want to hear more about what I do, follow me on Twitter at Mike2Saw, TOSAW. And if you are really looking for a financial advisor who will talk about pro wrestling, hot dogs, as well as option trading, along with giving you tax advice if need be for your finances, check out my website, stcharleswealth.com.
What more can you ask for, listeners? stcharleswealth.com, the place to go. We mentioned already at the top of the show, the CBOE website, the CBOE Insights blog for Henry's awesome report full of visuals. You want to see the rest of what they have to offer, CBOE.com/RMA is the place to go for all the rest of those good goodies. That's going to do it for us on the old OB today. Back again in a little bit for all you live folks with TWIFO This Week in Futures Options. Back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. I got a feeling we'll have some fun stuff to talk about, so tune in for that one. And then after that, for all you pro folks with a little bit of the old options oddities. Then back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or Search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.